Welcome to the Deep Dive. Today we're taking a focused look at Snap Inc. That's ticker SNMP. We pulled together their recent earnings, some analyst takes, news articles, basically trying to distill what you need to know.
Exactly. The goal is really clarity. Cut through the noise, see what's driving things, especially for anyone interested in Snap's position right now. And we're aiming to keep this tight, under 15 minutes.
Perfect. So let's jump right in. Where does the stock stand currently?
Okay, so S&P's hovering around $9.10, roughly.
Okay.
There was a small dip recently, like just over 1%.
Already saw that. Minus 11 cents.
Yeah, but you got to look at the bigger picture, too. The 52-week range is pretty wide.
It is, yeah. What was it, like $7 up to over 17?
Exactly, $7.08 to $17.33. So quite a bit of movement over the year. And the market cap is sitting around $15.2 billion.
15 billion, okay. And pipeline revenue, trailing 12 months.
That's about $5.53 billion TTM. But, and this is key, the net income over that same period is still negative.
Still in the red.
Yeah, a loss of about $532 million. So turning that revenue into profit is, well, still the challenge.
All right, let's maybe zoom in on the latest quarter then. Q1 2025, how did they do?
Actually pretty strong on the revenue front, up 14% compared to last year.
14%, nice.
Pulled in $1.36 billion.
Okay, and what's behind that growth? What specifically drove it?
Well, the big engine seems to be their direct response advertising, DR ads.
Right.
That segment grew 14% as well, and it now makes up a huge chunk, 75% of their total ad revenue.
Wow, 3/4. That suggests advertisers are seeing results, yeah.
It certainly seems that way. They're getting clicks, conversions, whatever they're measuring. And the other piece was Snapchat Plus Group.
Ah, the subscription service.
Yeah, that saw like a massive jump, 75% year-over-year growth, brought in $152 million.
So people are willing to pay for the extra features. That's interesting. Diversifies things a bit.
Definitely. It shows there's a core group finding real value there. It's not just about ads anymore, though ads are still dominant.
And did this revenue strength translate to the bottom line? Profitability improvements?
It did, significantly, actually.
Yeah.
Adjusted EBITDA, which is a key metric they highlight, that jumped to $108 million. Compare that to just $46 million in the same quarter last year.
Big improvement in operational efficiency then.
Exactly. And the net loss, while still a loss, narrowed quite a bit, down to $140 million from over $300 million a year ago.
Okay, getting closer.
And maybe most encouragingly, they actually generated positive free cash flow.
Really? How much?
$114 million. So they brought in more cash than they spent operationally and on investments during the quarter. That's a very positive signal for financial health.
Okay, positive FCF. Good sign. Now the users, always a critical metric for social platforms, DAUs.
Global daily active users, yeah. They grew 9% year over year, reached 460 million globally.
460 million. Solid growth overall.
It is, but there's a nuance. The growth is mainly coming from, let's say, less mature markets outside North America and Europe.
Ah, okay. What about North America specifically? That's usually the highest monetizing region.
Right. And that's where there's a bit of a slight concern. North America DAU actually dipped a little.
Dipped? How much?
Down to 99 million. It was down slightly from the previous quarter and also slightly down year over year.
Not a huge drop, but given the revenue importance, definitely something to keep an eye on, wouldn't you say?
Absolutely. Is it just a blip? Or is it harder to keep users engaged in that core market? That's the question.
Okay, so let's talk strengths. What does Snap have going for it fundamentally?
Well, the biggest one is probably that massive network effect. 460 million people using it daily, primarily for visual chat with friends and family. The more people on it, the stickier it gets.
Really the core communication aspect.
Exactly. Then there's their leadership in augmented reality, AR. They keep pushing innovation there. With lenses, AI video stuff, even their spectacles hardware, it's a potential long-term differentiator.
True. They've always been ahead on AR filters and things.
And the ad platform itself is getting better. They talk about machine learning improvements, using privacy-safe signals effectively, better ad formats.
Making it easier for advertisers to get value.
Hopefully, yes. And finally, they have a pretty solid balance sheet. Over $3 billion in cash and marketable securities. Gives them flexibility.
Okay, solid foundation. But we mentioned the North American DAU dip. What other challenges or headwinds are they facing?
Well, a big one right now is the lack of guidance for Q2.
Ah, they didn't give projections for the next quarter?
No. They cited macroeconomic uncertainty, potential headwinds. That obviously creates some ambiguity for investors in the near term.
Understandable, but it does raise questions.
It does. Then there's the ongoing intense competition in digital advertising. It's a tough market.
Fighting giants like Meta and Google for ad dollars.
Precisely. And regulatory scrutiny is always a factor. There was that lawsuit mentioned, filed by Florida, adds another layer of risk.
Okay, so lack of guidance, NA user softness, competition, regulation. Quite a few things to navigate. So, given those challenges, what's their strategy moving forward? What are the key initiatives?
Their focus seems to be, first, reigniting that user growth and engagement, especially in North America and Europe.
Wow.
By refining the core chat features, using AI machine learning better for ranking content, and boosting their creator ecosystem to get more compelling stuff on the platform.
Makes sense. More engagement, potentially more ad views.
Right, and they're going to keep investing in the ad platform tech and AR as that long-term bet. They also specifically mentioned trying to grow their base of small and medium-sized business advertisers, the SMB segment.
Tapping into that potentially large market.
Exactly. And importantly, they're keeping an eye on costs. They actually lowered their guidance for full-year adjusted operating expenses.
Oh, interesting. So cost discipline is a priority.
Seems like it. Plus, they have a share repurchase program active, mainly to offset dilution from stock compensation, things like that.
Got it. So how are the Wall Street analysts reacting to all this? You mentioned the lack of guidance caused some stir.
Yeah, it's a bit mixed, you know. The Q1 results were generally seen as positive, the growth and improved profitability.
But the uncertainty is weighing things down.
It seems so. The average analyst price target is still around $10.50, which is above the current price.
Okay.
But some firms have gotten more cautious since the earnings. Loop Capital, for example, expressed some caution. Cantor Fitzgerald actually lowered their price target.
So divergence among the experts.
Very much so. You see articles talking about the stock potentially doubling and others warning it could crash. Reflects that uncertainty.
Okay. Lastly, let's touch on some financial ratios. Anything stand out there in terms of valuation or health trends?
Well, the price-to-sales ratio, PS ratio, gives you a sense of valuation relative to revenue. TTM is around 2.75. Forward-looking, maybe closer to 2.6.
So the market values each dollar of sales at about $2.60, $2.75. How does that compare?
It's not extremely high compared to some tech growth stories, but reflects that they are still growing revenue even if profitability isn't quite there yet. But the really positive trend, as we mentioned, is that improving free cash flow. Getting to positive FCF in Q1 is significant. And looking at the quarterly charts, you do see that recent uptick in revenue growth and the net losses getting smaller over time.
So a trend towards better financial efficiency.
That seems to be the trajectory they're aiming for, yes.
Okay, great. So let's try to wrap this up. If you had to summarize the key takeaways from this deep dive on Snap.
I'd say fundamentally Snap showed some real strength in Q1. Good revenue beat, much better profitability metrics, driven by improvements in their ad business and Snapchat Plus taking off.
Okay, the positives.
But the lack of near-term guidance injects significant uncertainty, and that slight user softness in North America is definitely a key area to watch very closely.
A nuanced picture then. Strong execution in Q1 overshadowed a bit by future uncertainty and that user metric.
Pretty much sums it up, yeah.
Excellent breakdown. And just a reminder for everyone listening, this has been a focused analysis based on recent reports and data we discussed. Any investment decisions really require your own thorough research and thinking about your personal situation.
Absolutely. Standard disclaimer, but always important.
Right. Now, for a final thought to leave you with, Snap is clearly betting big on visual communication and AR, thinking about how quickly the digital world changes. What kind of maybe unforeseen tech shift or market trend could really turbocharge their growth? Or, conversely, what could seriously derail it? Something to mull over.
Definitely food for thought. And hey, if you found this deep dive useful, getting straight to the key points,
Yeah.
please consider subscribing to the channel. We do these focused analyses regularly, and hitting that bell icon means you won't miss the next one.
Yep, every subscription, every notification click, it really helps us keep doing this work and bringing you these insights. Thanks for tuning in.